How's it going, guys? VisualTrades. Today we closed at 42.13, and even though you can't see it, I'm generally excited even though we saw a down day. I will explain why. This is what I've been looking at, and this is what I've been losing sleep over. We finally had a clean break of the neckline and are looking to validate more strength to come above this neckline that has been topped out since our all-time high. And I feel like one last retest of this and it's over. Now, another thing, I know today was a down day, but even though we're looking to confirm strength over the neckline within the next few days, today was our lowest volume day since December 29th, 2020. Fact check me on that. Which tells me, if anything, that even though I'll get into the bearish micro outlook in a minute, along with the bullish macro outlook, which tells me that in this short-term pattern bullshit that's been playing out, that the shorts are finally starting to lose strength on us going to the upside. So in today I'll talk about the bearish micro analysis and the bullish macro analysis, encapsulating that bearish micro analysis. And then we'll also check on our MACDs, and then we'll check our MFIs. So let's get into it. Okay, so I'd first like to point out, we are bearish micro, okay? And I would also like to reiterate that when I was talking about the week of the 22nd through the 26th, I am not calling out all-time highs. I was simply talking about bullish price action, not calling out all-time highs. I'm not that, you know, far-fetched, you know what I mean? Anything can happen with the stock though. So right now you have your, what's it called, textbook head and shoulders pattern playing out. We got rejected off of this neckline right here, and soon I would expect sometime, later this week we would see a descent. Now, how far that descent is what I'm having trouble with here, and I'll explain why. So we did talk about a couple things, one being a trend line that was formed on November 15th, that was showing some strength hovering above this white dash trend line that has been in place since the beginning of November. The way to confirm a trend line is when you see a higher low, and then you see continuation off of that reversal, then it's a confirmed trend line. So that's how you know that you have a valid trend line. So we broke under that trend line today, so I do expect a little bit of downside tomorrow. The question is how much downside and how much amount of time we will see in the downside period. And here's why. So if you're looking in the mini head and shoulders and you see the shooting star reversal play out, the thing that has been getting me is the fact that we do have this trend line that has been showing major strength since the beginning of the month. But on top of that, I showed this neckline being broken. If we were to ride this out before some sort of final push to create this sort of cup and handles situation, you wouldn't be expecting much less than under this supply zone. And why is it called a supply zone? Well, there's been multiple times where we've shown strength as buyers in this region. You have multiple gaps up, and even on the way down, you have the sellers taking over power. But I'm specifically talking about this region right here where we're playing out this formation. We actually passed through and showed some sort of support twice, actually 3 times, around the 4150 area. Came back down, confirmed the trend line. Now we're starting to break, but we still have this macro trend line that we're worried about. So judging by this alone, you can see that this line that I formed through all of this, I mean, there's different ways to play. You can do it like this, or it all depends on, you know, how you're looking from the top. But judging by this, it makes it hard for me to create a thesis that says that we go below 40 by Friday. And let me explain. Here's your bullish macro outlook. This is actually a quicker video than I thought. Okay. So I've been seeing a lot of people throw around the word SOS, and you know, I can get behind it. This is drawn incorrectly by time, by the way. Do not pay attention to this. This is kind of edited as it goes. Maybe it depends. Okay. I've seen the words get tossed around. However, I don't like. There's a lot of times where I'll see things or I'll hear about certain things get tossed around with no validity behind it, or sometimes they don't, or sometimes people who, you know, throw out these patterns or say that, hey, you know, we're here, or hey, expect the SOS in the coming days. You know, there's rules behind all of those things happening. You can't just say that the SOS is coming because you see the formation playing out similar to the setup that you saw in May. That's not how it works. There's rules to this shit. So I provided a textbook definition of what's to come, and in order to relate this, we need to go back to phase A. Now, with phase A, you have something called an automatic rally that comes right after natural selling once you hit your selling climax, which creates your upper trading range, right? Now, the secondary test, which kind of comes below the selling climax, is to shake out any long positions and hit any stop losses on the way down to create your lower trading range. So now you have this trading range provided by your selling climax and your automatic rally, okay? So this is wyckoff. This is shout out David Marino. Now, in order for an SOS to be valid, you have to break near, above, and hold your upper trading range. That's just the rule. So, with that being said, right now, we're in a position where we do have a consistent demand over supply. It's not enough supply to go around, but a lot of people want shares. As you can see, we have been a constant uptrend since October 27th up until now, respecting this line that has been formed since, you know, somewhere around there. So what we're currently experiencing are called last points of support. They're great positions. This is textbook definition, actually. I'll show you right here. It's in phase D. So after your spring, you're going to see a consistent dominance of demand over supply. Now, when you advance into an SOS, prior to this, you need to see an increase in volume, which we somewhat have been seeing on green days. But you also need to see you need to see LPSs on smaller spreads and diminished volume. Today was one of those days. You have the lowest historical volume we've seen for the stock since last year, and on top of that, they were only able to bring us below -1%. The shorts are losing power. This is not an emotional thing. This is just something that I am witnessing hand on. Now, when the price moves to at least the top of the trading range, like it says, LPSs in this phase are generally excellent places to initiate or add to profitable long positions. How do you know you're in the upper trading range? You look at the top of your automatic rally, and you suggest that if that were to break, then you would be in the next bracket of trading range that we would be in. So it would be around the 0.786 level, and the 0.618 level right here will be our new trading range. Before we move into all-time highs, but right now we're stuck in between this 0.618 level and as low as this 0.382 level. Cool. So Now that you can go to sleep at night tonight, knowing that your positions are somewhat safe by the power of Fibonacci, the one thing I'm looking for that's going to keep me up at night for real is this macro retracement that I have. Shout out Jen Collado as well for this thing that I heard. I mean, I kind of knew, but you know, just got to put it out there just so that way, you know, I don't want to have to, you know, deal with any smoke here and there from any YouTubers, because I know there's a lot of drama going on in the community and shit like that. I'm not trying to be a part of that shit. I'm just here to be making money. But, you know, to say the least, usually above a 0.5 level in the fib, you will have bullish price action if you can hold above that, which makes your 0.618. Technically, this is supposed to be 0.382. I draw my retraces weird because it's easier for me to remember the numbers going up, but, you know, overall, if you flip them, they're all the fucking same thing, you know what I mean? Like, except for this in relation to, not even gonna talk about it. It's just something that I notice is more accurate for me to justify. This isn't your textbook retracement. This isn't how you're supposed to draw a retracement. It's just something that I've noticed it being respected. But if we were to hold above 40.77 into, you know, the coming days and show strength above that, we wouldn't even be required to really even test this trend line. But our trend line will be our last point where, you know, we would need to, you know, hold the fort, you know what I mean? So if we could do that, then this whole pattern suddenly flips bullish, because we are in somewhat, I don't want to call it a symmetrical triangle, but, you know, to each his own. Okay, I hope that made sense. So that way we could put to rest this nonsense of drawing bars patterns from here and then trying to match it over here and then seeing how it fits. We're in a completely different time zone. We completely different demand standards, completely different volume standards. Would not be surprised if volume is being held off on the back end. There's just a lot of stupid shit that's going on with the stock to where it's not going to be textbook cookie cutter. You know what I mean? You're going to get shaken out of your position that way. I would not be surprised if the all-time highs were to drag out into December. You got to remember, we're dealing with greedy people here. The premiums that they want are the lowest forms. You have call sweeps going on. I mean, shit, even Nancy Pelosi got the fucking shares. You know what I mean? Her average is 47. That alone just makes me want to hold the fucking stock, you know what I mean? But I'm not trying to be emotional. I'm just showing you what I see. Okay? So, if we were to see a continuation on a micro outlook of this bearish trend, and let's say I'm just completely wrong and, you know, blew the trend line out of the waters, I would not expect us to go any lower. This is my hard price. Any lower than the 0.618 level. This is a proper retracement, okay? This is how you draw a real retracement. So, congratulations, Makai. You actually know what you're doing. Let me go ahead and apply it. Let me say this as proper fib. There we go. So, I would not expect this to go lower than 38.87. However, there's a couple of things, you know, keeping it out the way of this. I mean, we're currently in a bull trend. It's just a whole goo gob of shit. Okay, so with that being said, I know there's probably a couple of questions that you have to, you know, end this video out. Let's go over to the time zones real quick. So, on the daily, what was our high? 44? On the daily, it is kind of hard to judge where we stand in terms of how much continuation we will see. However, I do say, me personally, I don't see too much more downside. I do see downside though, okay? So in the coming days, I do see downside. However, ending the week, ending the 3-day candle that we've been talking about, that will start to form tomorrow, along with this MFI, you know, still being bullish on the money flow. I said one more formation of a 3-day candle, ending in the green at least, would have this MACD flipping. I did not say that it will flip by the 18th. I'm saying that we can see the start of a flip by the 18th, because sometimes this MACD can do something like this. And, you know, you want to hold strength. You don't want to fake out, you know, going into a different candle. So we do have a new 3-day candle forming tomorrow. This does give me hope that the close of this green candle was above this sort of support that we have now formed. Over time, we've had wick after wick testing it. So, you know, I would consider this a micro trading range with a support falling somewhere between 41.25 all the way down to 40.77, especially with the open of this huge red candle that we saw that created our reversal downtrend up until where we are right now. So I really hope that the most downside that we see is all above 40, because then it will still allow us to flip this MACD. I don't even know if I'm in frame, my bad. Oh, sorry. Yeah, it would allow us to flip this MACD come the 22nd through the 23rd. And I'll go back to my time zones real quick. It puts us prime into where I saw this this window of opportunities for us to head into a run. Don't pay attention to this. This is drawn wrong. This is not drawn accurately. It's supposed to be somewhere down here, but you know, these are day candles, so it's not ideal to. You see how it was more accurate on this one. This one. There you go. Pay attention to that. Yeah, I think I have this on log if I'm not mistaken. Yeah, I have it on log. So it's kind of hard to draw trend lines, but right now, currently, we are, you know, you get what I'm trying to say here. So I feel like the start of the window for us to see all-time highs is the 23rd. Give us time for this MFI to cool off. Hopefully, we can see a minor flip in the MACD on the daily in the coming days, which will show us that we are uncomfortable with downtrending, because the more a MACD flips, the more uncomfortable it is at those price levels. And if we are in a macro bullish outlook, along with the indicator signaling that we are way too, how can I say this? Way too uncomfortable at those levels, we could see further upside. You know, I'm not trying to be biased here, you know, but I wholeheartedly do believe that, you know, in conjunction with this RSI as well, I don't see us going back below the 50 level of this RSI. I don't see us going back below 40s ever again. It's just it's hard when you have all these bullish outlooks now. You know, I think I'll admit when I'm bearish, man. I mean, shit. You know, I was down here at 33 calling out the 40s, and you know, I probably had some doubters, but you know, here we are. So I would not be surprised to I don't want to say it, but I'm fairly confident that we don't see the 30s again. So I'll just end it at that. If I'm wrong about that prediction, I'm fine with it. But in terms of upside, I mean, I have this whole window of opportunity coming for me personally to see a position someone get added. So you have about 18 trading days. It's about 3.5 weeks worth of trading for us to see all-time highs before we get to the end of this bracket. Reminder, we are still dealing with a different Fibonacci time zone. So I would love to see the start of a break, hopefully into the 50s. I don't want to say it. Maybe sometime next week, the 22nd to the 26th. But you know, a lot can happen with this stock. I mean, shoot, this thing might shoot up like fucking 90% in a day. Who knows? You know what I mean? Like, it's just it's hard to predict time with the stock, but you know, I'm fairly confident. I'm not worried about my position. Yeah, I mean, that's pretty much it for this video. I hope you guys enjoyed it. Do whatever you want with the like button. I don't care. All right, I'll catch you.